Are you just one of the herd? Do you own the same stocks that everybody else owns? Well, today we're going to take a look at the most widely held stocks. And then we're going to take a look at the 40 stocks that Goldman Sachs says you should avoid. Let's take a look. According to Zero Hedge, this is a list of the 50 stocks that most frequently appear among the largest 10 holdings of hedge funds. And as you can imagine, it is stacked with technology and internet software service companies. Now, this isn't necessarily good or necessarily bad to hold these stocks. On the way up, it could be good. On the way down, it could be bad. Looking at this list, which is actually hard to read, I will list them for you. Number 1 is ding 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 Facebook, followed by Amazon, Time Warner, Microsoft, Alphabet or Google, Alibaba, Visa, Bank of America, NXP Semiconductors, and Aetna Inc. Also on the list is Apple, Monsanto, Netflix, Citigroup, Autodesk, Broadcom, Booking Holdings, Caesars Entertainment Corporation, JP Morgan Chase, and Comcast Corporation. So, do you own any of these stocks? Well, this is the time in the market where we're near a top that you ought to take a look at your holdings and make sure that your portfolio is adjusted the way it should be, the way you want. You have time. We are heading to a top, and that is the time where it's going to be the most precarious, the most risky, in my humble opinion. We may reach the top and extend beyond, and if that's the case, great. But if not, and if we do head down, you want to make sure that you have the correct balance in your portfolio. So now let's quickly go and see the 40 stocks that Goldman Sachs says you should avoid. As we all know, not all stocks are created equal. That's especially the case in the current market where volatility is back. Some stocks are managing to hang in there as investors reprice risk, while others have taken a beating on worries about the underlying company's profit outlook. If there's a new moment of truth on the horizon for markets, fundamentally shaky companies could be whacked even further. Even strong companies may come under pressure as Wall Street is forced to recast profit projections. So here are 40 companies Goldman Sachs thinks have considerable downside risk. Now, there are some surprising companies on this list. Some of these companies are on the previous list that we went through. However, I would pay heed simply because Goldman Sachs swings a big bat. So I'm not going to read all of these. You can pause your video, but let's go through the top ones and then some of the surprising companies. From the top, TripAdvisor, National Oilwell Varco, Campbell Soup, Juniper Networks, Accenture plc, Union Pacific Corp, Rockwell Collins, NetApp Inc., Chipotle Mexican Grill, and Target Corporation. Some of the other surprising companies include J.M. Smucker, Mattel, Equity Residential, Advanced Micro Devices, Seagate Technology, and then there's Apple, Boston Scientific, Realty Income Corp, F5 Networks, Akamai Technologies, Hess Corp, Western Union, and Best Buy. So again, when we're nearing a top, it could be a temporary top. We might continue on, but I think we are heading toward a top in the market, and this is the perfect time to take a look at your portfolio and reallocate if necessary. So take this time and use it wisely. For Chew Dog Charts, thank you.